Watch your horizon, the charts are bold. DD bands rapping, stories untold. Riding with rockets through your AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Riding with rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. The pulse ascending, mind on fire, never ending. Trees of gold, endless fight. Push on through the endless night. Riding with rocket scooter AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, midnight glory. Heartbeat thumping, another story. Green and red, flashing voices loud. Future kings standing on their cloud. Checking the charts with your AI. Up we go, reaching for the sky. Every train home never dies. On the edge as the numbers fly. Checking the charts, checking the charts. Midnight glory. Time to re-in-awe, it's blending. Mind on fire, never ending. Dreams of gold, endless fight. Push on through the endless night. Push on through the endless night. Push on through the endless night.
I think in a little bit, I have to go grab Pickle and take him out so he can go to the bathroom. I've been locked up all morning. Oh. I think the 50% discount was just for new users. Well, that's what somebody told me. I asked him for clarification, but I didn't have I don't know what they said. I think somebody said new users only, but get him a litter box. No. Litter boxes are the worst. All right, so Nasdaq is now playing around that final little bit of range, and the question I want to see is, do I want to risk any of this to take any kind of trade? I've been waiting for us to test this illiquidity pivot kind of range here. Now the question is, do we get close to moving up to upper DD band? This might be a 2-leg down inside of here. I think that this resistance is solid. Overshooting here, it could push up to there to finalize the day. But man, I just hate like trading this upper range here. I've been looking for any clues of anything. This kind of reminds me of this morning, kind of the same thing, that lower low, that range, and will that actually pick up some steam? 719 to 773 could be a 50 points, about a 1.2 to 1, not that great. But still a trade though, right? Any kind of trade's a good trade. Guys, hit the like button if you don't mind. Thank you for tuning in. And friends from My Funded, don't forget to sub to the channel. We're here every single day. We love My Funded, but we also do giveaways all across the board. Here, I have... Basically, I work with the majors. I work with My Funded, and Tradeify, Apex, a couple others. We have Code Rocket Scooter for all of them. We get massive deals just like today. My code gets you 50% off today, which is incredible. We do giveaways on our stream, a variety of them, and every single day some kind of different giveaway. We give away hundreds of accounts on our stream every single day. Also, do my live trading in the morning, so you guys can tune in and check us out. I'm up roughly like 5,000 something bucks today. I am trading a MyFunded Futures live account. I'm trading 5 Tradeify funded accounts, bottom right of the screen. I have an ETF live account as well. I'm live funded in 2 different prop firms. Live funded is like the ultimate goal you guys, want to achieve if you're doing prop firm trading, because that's real money trading, and it becomes easier. The rules aren't as hard, and the live funded account's kind of nice. So, any big stocks close to MHP? Let's take a look. Let's go to the scanner. Let's go to strategies. Let's add all the stocks. The trick I do that is by going to liquidity map and adding all of them. So they all pump up. And then I go here and I sort by distance to hedge pressure monthly. And I'm going to see anything nearby. Scrolling down. Google's probably the one that's the closest. Oh, Goog, not Google. So Goog is like right in the, I guess Google is kind of nearby as well. So Goog is in the vicinity, about 0.3% away. Google also 0.3% away. As far as the bigs, like the big techs, and there's some big companies in there. Let's see, what do we got at the top? Right on MHP, got like Transocean, GLD, Expedia, PayPal, Upstart. That's still talked about. AbbVie, American Airlines, like nothing like of the major techs though. Google's it. American Airlines. Meta's nearby as well. So Google, Meta, Apple, I guess, well, Google, Meta, Apple, all within a 0.5% distance. Apple's right on the edge nearby. But Apple breaking through on gamma squeeze to the upside, still looking pretty solid today. Most stocks like to stay on the same side of MHP they open on. So if you open here, you usually close here. MHP breaks are rare to break through that and keep going. So it's doing that. Doesn't mean that I try to fade it back down into there, but does mean that Apple might want to interact with this by the close. So just be careful, those of you. Right, that the stocks are moving a little bit extra high on gamma squeezes only and not necessarily pure demand. Not typically gamma squeeze is still sustainable for big upside moves. And you can see that, when you talk about a short squeeze, how do you know it's a short squeeze? It's because the market is curving faster. It's not like it's like moving like this. A good way to tell if it's shorts covering or longs buying is longs buying will kind of do this kind of move. It'll move quick and then slow down, but a short covering will actually move slow and then speed up. That's what we're seeing today, right? The start of the day was suppressing higher, right? These are natural, people are longing the stocks, so the S&P or Nasdaq moves up the new set point, just like that. But then partly through the day, it's the curvature starting to switch this way. And whenever it curves this way, it's shorts. Oops, sorry, my thing is drawing a straight line here. That's a short squeeze always. And short squeeze doesn't not necessarily mean demand for here. It means shorts are getting pushed out of the way from here. So, yeah. I would say that today, this upper limit is probably going to be resistance. I wouldn't be trying to fade a consolidating range inside of a short squeeze area. Usually short squeezes will pop before they drop. So never do I take a consolidating short squeeze like this and then just bet that it magically falls down. People are getting squeezed. So usually it's like the maximum amount of squeeze that ultimately resists the market. So I'm never like, aha, let me just go short the market now and hopefully it falls. Never think like that. MHP is the monthly, it's the gamma exposure of market makers who sell options to the underlying dealers. So dealer maximum delta hedging takes place at that orange line on the monthly options. Blue is the weekly options. So it's a guaranteed high volume pivot when you run across it. Anytime you interact with this monthly hedge pressure, it'll be a volume spike. It's our way of predicting volume in the market using options and is damn good at what it does. As a matter of fact, it never fails to predict volume. That's what we're known for. Volume prediction. You see 202.5 is the highest volume node of the day. We know these numbers at the start of the day. And so at Rocket Scooter, we can use options to calculate high volume pivots before they even happen. And that's really where the key comes from for my entries and exits in my system, is that I'm always entering where volume will be, but I know those hot spots before it takes place. Today, volume will appear here. Volume will appear here. These are the two high volume pivots we're dealing with. And as you see, same thing, volume. This one also volume, yeah. Yeah, no problem. Light bulb moment, Julian. You know what I mean? Like, if shorts are squeezing, then let the final pain happen to somebody and then jump in. Like, this could have been it, right? I might have missed this because I was finalizing the show earlier. But imagine, like, the market's squeezing and consolidating. Never do I see, like, red and go, ooh, let me jump in on the market shorting. You, like, let it exhaust to a degree, and then you bet that that's the end kind of thing. Right? Well, I always think of it like that. In the same daily range for over 2 weeks. It'd be nice to break this range soon. It would be. And the problem is I don't think that we're going to get like a big thing out of this. I don't know if Trump is talking or what the hell is going on here. Quickie little volume pivot to test 719. That's nice. I do like that range. I should know how to pick that up though. Can I risk that with one? Picking up a few pennies myself. I'll just put one contract on it, whatever. I don't care. Why the hell not? R&R, just a commit to trade. There's no science to this one other than this is a high volume pivot. I can take a commit to trade here. 719 to 770 does finish off a 50-point run with the 40-point stop. The R&R is shit on this one, but whatever. One contract because the R&R is shit. I'm okay with that. Make sure there's no news though, because I don't want to trade against news. But yeah, I normally wouldn't be making a trade here. But there's no reason I can't commit to something. I do have $5,000 of profit today, and I'm okay with taking a little bit more risk. Not because I've made money, but because the market is just quiet. Let me double check that there's no like news or something. White House Press Secretary Leavitt's talking. Aluminum import tariff takes effect tomorrow. Oh, that's just algorithmic bullshit. Well, I'll take it. No, I was longing off of the high volume pivot red line retest. Not that the red line disappears once you touch it, but there's always like, this was the key level to break, and now it's testing a support. Again, I'm just committing to trade all the way up to green. There's really no reason to like do too much with this one. This is my profit target I'm going for in this guy right here. If you guys don't mind, if you're new to the channel, don't forget to hit the sub button, especially coming over here from My Funded. We trade every afternoon. I trade every morning as well. I do all my live trading here. I'm currently trying to run 5 Tradeify accounts up to $150,000 of profit and try to go live with those guys as well. And I'm always doing my trades. I'm always showing you guys on the screen the trades I'm making. You can see right now I'm live, one contract. My P&L today, I just a little snapshot for the stream earlier. That's my P&L today. Am I looking forward to go short? No, I wouldn't be shorting from here. From here, I'd like to see this move exhaust at a key pivot like that green line, and then I might contemplate something there, but there's no evidence that the market's going to sell off. Like zero evidence. The short squeeze is so powerful right now. People are trying to figure out how to get in on this or get out of the way on the shorts they've already taken. Now, there is strong resistance off of this red line. That's why I still have that opportunity on the S&P to move higher. It's about 10 points up. And then above here, this ultimate limit would be like my highest high I'm looking for. We got about 2 hours left in the market, so it's plenty of time for it to climb. Like I said, I just threw one contract at it. I don't really care to take too much risk. On TV, I said not think Green Days is a streak. Why is that? Well, because there's no such thing really as a winning streak. The market, like in anything that you do, every event is distinctly different. Therefore, it's random. Like the next day doesn't know anything about the first day. You winning or losing doesn't. A streak is just you having a pattern to it. I lost because I lost before. A streak would assign some kind of meaning to consecutive losses when the consecutive losses really are random. They call it the hot hand fallacy, like in free throws. Like if you make like 8 free throws in a row, they're like, he's on fire. He's on a winning streak. He'll make the 9th one because he made 8. But statistically, the odds aren't any better because you've made more in a row. The odds are actually better that you lose the trade. I mean, or lose the shot. So if I win 70% of my shots and I've made 15 in a row, you would think that, aha, I might make another one because I'm on a winning streak, but the odds are actually worse and worse and worse. The more that you're winning, the probability, it's more likely that the law of large numbers brings you back to losing a certain amount of times after you've won a certain amount of times. So the hot hand fallacy means you take the opposite stance to the statistics because you think winning streak changes your probability, which it really doesn't. That's what that means. So, your winning streak is mostly just random noise. And so I don't take a winning streak or a losing streak as something that affects my mental game. I don't lose 4 days in a row and start thinking like, oh, I suck at this or doubting myself. I just say it's 4 random days and it doesn't really matter. We have the 790s today? I think so. I think it's possible. Sound like I was on the Big Short cast? Yeah, probably. I mean, like, you know, as a kid, I was always like, I played chess. I play guitar. Everything I did was mathematical to a degree. Music was very mathematical. Kind of a math nerd, always thinking about numbers and stuff. But boy, that's come to my advantage in life. You know, always thinking about numbers it really becomes a skill of a trader because you're always thinking about numbers and thinking about dollars and risk management stuff and odds. But yeah, I wouldn't think that like my odds have nothing to do with repeatability like day after day after day. This is the backtest odd, which means individual discrete moments that don't care about the previous day. Looking at them one day at a time, 96% of days will not pass through this daily green band, which is a great set of odds. So while it can break through it 10 days in a row, doesn't mean it's still not 96% over time. And that's kind of the takeaway of the odds that I use when I'm trading. Now it looks like I'm falling back down to profit. To start, that was a good little possible bounce point. This was a commit to trade just to final up and touch the upper limits here. We'll see if the market does hold. Like I said, just tap with one contract, one account. At max, I'll give $1,000 up of today's gains. No big. Don't really care. I need some good target to look at today. Let me double check S&P. It's trying one more time to break those lows. And Nasdaq is testing its illiquidity pivot one more time. Nasdaq supporting area is roughly about maybe 707. Oh, I did grab that in Nasdaq. Yeah, I did. So I put that S&P right there. It's a terrible idea to be trading this high, but I don't have any reason not to trade something. The halfway point distance of this run is roughly right in here. This guy could flush out of that and reclaim this, and it reclaims. I'll probably add to the position, just get one more. Or add on a different account. So I'd like to see this support this key breakout area. The market is trying to sell, so be very careful. It could flush very rapidly. But I'm not going to catch a falling knife. If it flushes and reclaims a 710, I'm in it for a 2-to-1 trade or 1.5 to 1 trade right here. So let me let it flush and then reclaim. I'll call it. I'll watch this and the downside move from here. It's only about 25 points on Nasdaq futures. That's not a lot. That'd be about $500 of loss. No big deal. Let me get one more flush candle to play with this one. Super low daily volume. Yeah, not a lot of activity. The market is consolidating and shorts are getting squeezed out. And really the action is kind of like all hinging on the trade war, right? Do we end the trade war favorably? Is the trade war dying? Is the trade war picking up steam, momentum, whatever? Get one more nice little low here. Give me that flush, baby. One more candle. Flush it. Down the toilet. Let's go. Give it a flush. With high volume, though. This is just algorithmic. Stocks are pulling back, which is why we're seeing this. A little bit of a pullback in some of the stocks. This isn't people selling the futures. This is just the stocks consolidating. I'm up or near a high. Come on. One more low or low. Give me a low candle to flush it. I'll tap it one more time with one more account. If the market just sells off today, then it sells off today, you know? Not a... Now, actually, one issue with this, though, is that this range right here is also a possible support. This is a really strong consolidating area. If this just flushes really fast to here, I'd love to gobble it up there as well. So I don't know if I want to add one more. Maybe I'll do one more account. Roughly like this like 710 level, give or take. Well, flush to a little bit lower lows. One more. One more. You know, some VPOC shifts to top and try to solve. Yeah, sometimes. Sometimes, but the market doesn't necessarily like lose its bull momentum unless the stock starts selling off too. So make sure you're monitoring also some of the stocks with that philosophy. You're not wrong. Keep the index is just low volume. It's just tracking the stocks. So we're gonna have to watch the stocks to see if they maintain or they sell off today. Looks like a low consolidation, not really much volume picking up. Get that flush. Get that flush, baby. And overshoot maybe like 10 points. Couple more. Come on. Get out of the way here. Get that flush. Let's go. There it is. Okay, do I want to try one more? There's that support. Give me a little bit lower. A little bit lower. A little bit lower. 700. Okay. I'll add one more. Why not? I'm going to risk $1,200 on this one. Let me move my stop to maybe 680. This previous highs here. Yeah, roughly 690, 680. Okay. 680 here. The opportunity is much better on this one. This is going to be as long as we reclaim this, I'm fine. I'll pull the plug right here at 680. So that'll be about $1,500 in the hole on that one. I'll flush a little harder than I thought. That was the flush spot here. Around the edge on that one. And this is that range I'm looking for to stay in. I might actually hold a little bit further. I'm just doing this in one account, so I'm not really... This account's got $50,000 of profit in it. Are they saying something? You suggest Step and Iran nuclear talks, blah, blah, blah. Okay, there it is. There's that level that I wanted to see support at today, so that's it. Curious if I want to add one more account to the mix. I'm going to hold this for a little bit further. This is actually like where I really wanted to get in earlier. Get a solid bounce off of that. This is pretty gnarly, but let's see if I can get something good. All right. That flush was a little harder than I expected, but we'll see. Now the R&R is great for a move up to upper DD band. We should be good. Watching the stocks here on that retrace. That was pretty gross, but we'll see. On a tick chart here. A retracement move. Let me load this up over here. Pretty brutal. One more leg down to scare the bulls. Oh, my platform is... No, my platform is crashing. No, I gotta reboot. Hold on. Don't go anywhere. You guys can't see the top of my platform just crashed. I'm getting the spinny wheel. It's about to crash. Hold on. I gotta reboot. Give me a second, guys. Close down. Come on. Open back up. Come on. All right, we're back. Oops, let me go back to features here. Heyo, let's good. There's that flush. Let's hang in there. Let's hang in there. At that 700 level, though, that's what we want to see. I mean, I literally scribbled that whole thing. I want this actual stop to be closer to 660. Let me draw this a little better here. Yeah. About 40 points below 770. Yeah, that's the level. And let me go up here on QQQ, show you guys the strike. Let's see if I can make this a little bit better. 526 was that level in QQQ. That's about 700, give or take. And then I want to see about 660 is where I would probably stop this one. A little bit lower. Less than 660. Now let's hopefully the market can hang in there. Do I want to be a maverick here and add one more? I don't want to be super bullish at this. This account was up. This account was up like $1,100. So I'm now down $500 on this one account. That's okay. That's okay. Should be all right. Suggestions for funded next. What do you got? The Fed releases minutes of discount rate meetings. Overall, Reserve Bank directors noted considerable uncertainty about the outlook. Yeah, it's the same. That's the same song and dance we get every single time. Fed is uncertain about the outlook because they don't know that it's all hinges down to the trade war. This isn't the minutes, the normal minutes of their meeting that they have discussing rate cuts. This is just minutes of some other meeting. But yeah, this is, thank you for showing. This is the discount rate meeting, whatever that is. Fed minutes of discount rate meeting. While most directors describe recent economic conditions as generally stable, I've been saying it's stable. Yeah, I agree. Also expressed concerns about the potential impact of evolving trade and other policies and economic activity, price, employment, blah, blah, blah. Yep, tariffs. Tariffs go up, tariffs go down. Tariffs go up, tariffs go down. And we'll see how that changes or the impact of that is. All right, give me some more flush. Let's see if we hit that 660 a third time. Declining volume. Look at this. Volume advanced into the sell. Volume's declining into the rise. Means the algo is picking up some stock movement to the upside. Resilience is still nice and tidy and clean. I don't want to bag hold this. I'd like to get the last stretch of move here. But it'd be kind of nice to see us flush maybe one more time to scare the bulls. Maybe I'll jump back in. We'll see on another account. And this is just the same stuff we talk about every day with the Fed. They want to see changes in the, tariffs are going to add to the inflation. That's really all that it is. It doesn't get any more complicated than that. Bam, 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 bam. Oh, yeah, you guys shorting at the top and grabbed it. Very nice, very nice. Here I am gambling for the last leg of a long, just to see if I can grab it. I'm totally okay with trying to get a bigger move. But yeah, if this does sell off till the end of the day, that'd be kind of gnarly, right? We're gonna having a really hard time rallying from here. This did hit a considerably strong pivot. We talk about our illiquidity pivots in the boot camp, right? You guys know those pivots. They're really strong. 719 was a strong pivot for resistance. Get one more flush candle, scare out some bulls. One more. 526 is that level I do want to see support. So, but either case, like, it's holding pretty well. There's some wick action here. I don't like hate it. Here's that flush candle. One more. I'm going to close right at 660 if it doesn't play out. Oh, shit. That's hitting hard. Okay. There's a volume on that one. Should I hang on to it? This is my big account, by the way. This one has plenty of fat. I'm not going to bag hold this on a reversal, but do I want to play this better? That is much lower than the area I was. Okay, that's the flush, scary flush candle. Hang on there. I'm down $3,000 now on this one. That's okay. See, this is why I don't like picking up pennies from a steamroller, but this is that volume flush. Let me double check there's nothing severe coming on the news here. Nah, I'm okay with that. I'm cool with it. Let's rally back up from here. That was just an unlucky kind of run there. I think we crash from here. Nope, res is good, market's good. So a little bit of stock selling should be okay, but hopefully this snuffs out here. I didn't like that much drawdown. I actually held on a little bit longer than I wanted to, but that 660 was my stop, and we're actually fighting there now. So let me, if it starts pushing any lower with like another wave, I'll just probably trim this out. But I still wanted to get in long. I'm okay holding it. This account's up 50 grand. It was already up 1,000 today. So I'm okay with like taking a little drawdown to at least get in on something that's looking good. We'll see. Come on, market. Let's get some love here. Waited all day for a dip to buy. Can this be it? If I just get flushed out of here, I'm just going to be sad days. But I feel good. I feel good. The question is, do I want to add Marty in on 2? It's kind of shit because my entry is like such dog shit though. Like I could have been so much better here. I might, let me grab something in another account. Let me add, let me trade him one more account here. Let me add something to my plate. long in one more account. See, I'm spreading my risk out a little bit. About like 5 or 10 minutes, hopefully move up here. No, just end of the day. Like, it's not really, I wouldn't call it news. I would just say it, Fed minutes talking about the outlook of, this is one of their meetings. It wasn't like the minutes that we always look for, but it was some minutes of a kind of like discount rate meeting. Talking about the general uncertainty that the Fed has about tariffs and stuff is nothing out of the ordinary in that kind of meeting. It's pretty normal stuff. Come on, let's run it. Let's get a spike. Let's lose. This is the exhaustion candle. Fingers crossed. Let's run it. 660 is about where I was a little uncomfortable with this position. That's the dip I wanted to get for the bigger run up to close at least the 719 and better. Hopefully 780 if I get it, but I took a little more heat on that than I was happy with. But whenever I'm doing trades like this, I don't risk it in the accounts that could possibly blow up. This account's got like 50K of fat in it. I'm absolutely cool. I'm up $1,000 on this account already, so I'm okay with using that one to take the risk on. Those red lines are pretty solid resistances, though. Let's let her rip. No more red. Let me do a little measurement here. I really should have tapped out with micros, but it's okay. Yeah, so 660 was like my kind of stopping area. And I might size this down if it doesn't reclaim this pretty soon. The R&R is really awesome on this, though. All data still good. All data still good. Come on, let's fight this off. And 640 is a little lower because it's actually I actually made a mistake. 526 is at 640, not 660. So that really is my mistake. I could have sworn we were at 526 already, but we weren't. So this is the next strike interacting with these 526 level. I thought it was lower than it was, but this is really where that pivoting level is. 640. This is the opening range high before we flushed out. All right, just a little bit of selling pressure. I don't know if this is preemptively, like maybe some news is leaked or something about non-farms, but that's still a little bit of ways. I've been waiting for a dip like all freaking day to get in on this. Let me check S&P really quick. Problem is this is actually like getting worse as it's falling. The volume is actually increasing into the selling. So this is genuine profit taking. There's no crazy mechanic here. This is dumping. Each wave has been higher and higher volume. And it's curving this way, right? Just like when you're curving this way, it's short squeezing. This is long squeezing. This is just genuine profit taking, like knocking people out of the way. Let's keep our fingers crossed on this one. Let me just shorten this up a little bit so I can see the whole day. Kind of supporting this 58.60 level. Come on, baby, give me some green. As much as I just want to hold just in case it rallies up, I could put more risk on the table here. I just kind of don't want to. I just want to be in case it rallied further, which I'm okay with. Hopefully the Bulls are back in town. Maybe trading past 2 p.m. is indeed bad. No way, man. We got rid of that rule for a reason. Dang it. we gotta let the afternoons be exciting. Come on, give me one more green candle to get right back up to top. So this is my mistake. 640 was that 526 level. That's where that support could have been. I should have been more. I should have allowed myself more room on this fucking trade. Like instead of like I longed and I longed again here, I should have longed again there where I wanted to. So now my entry is dog shit. I'm just crawling back to start. My average is 714. Oh God, look at this. Look, I have to go to red line just to break even. Blech. That sucks. Hate the idea of that. The only way I can make profit on this trade for the most part is if I added risk here, and I don't want to do that. This account's only under like 600 bucks for the day though, so I'm not necessarily mad about it, but I did grab along at 640 in my MyFunded Futures funded account, and that's up $1,000 right now. Well, that's good. I like, that's what I did. I longed. This account's the worst of all of them. Like I've longed here, and then when we hit 640, I longed in a couple of my accounts actually. So this one I'm holding on to, and this is the worst looking one, but my funded's ripping, which is good. Put some money on the table here. Give me that money. Give me that money. Let's go. $1,300. Let's go. Let's go. Keep running. Hold on, Julian. I'm not seeing your questions, bud, because I'm like focusing on my trades right now. I'll get you in a little bit, okay? Let me read up. What's your question? Hey, Julian, do you mind typing it again? I can't scroll up to chat and see your question. You do me a favor? That's the hardest thing to ask me to do. Now, this is even with 300 people, it's hard to find. In the daytime, when there's like 1,000 people, it's even harder. What was your question, buddy? Can you explain what happens if VIX falls below? Essentially, you shift to this mode of the S&P being less sensitive to catalysts and events. So if you have like a pivot, if you are less than triple B versus above triple B, I'm just going to write 1B because my pencil's being weird right here. Okay, when you're above triple B, what happens is the market is a little more sensitive when it's falling against a pivot. You will see a lot more volatility than if it's less than triple B. You'll start to see yourself oscillating much less within the range of your 10 and 40. We always say 10 and 40 are your magic numbers. 10 ES, 40 NASDAQ is your magic range here. And when you're doing 10 and 40, that's about how much oscillation you're going to see. So you're going to hit your pivot and oscillate within 10 or 40 points. VIX is above triple B. There's a very high probable chance you're going to oscillate or bounce much wider than your 10 and 40. So you're going to overshoot your pivots a lot more. We consider anything that oscillates less than one strike distance not an overshoot. Well, that makes sense. I have to literally like, oh, this account is down $400 for the day now. That's this one right here. I was trading the one with the most fat, and it's the biggest of my accounts. So give me some green, baby. Let's at least retrace the mid. It's at 690 at 700 level to test. At least for now would be good. I scooped it up with 2 NASDAQ contracts on my MyFunded Live account as well. So that account is up about 1,600 right now. Fucking go. If that's 700, I'll make a 2G profit. Daddy says go. Come on, give me a little bit more. I'm waiting for that dip all day, baby. Give me some more green. Give me some more green. This account now is this account now is actually flat even for the day. So this account is trying to crawl its way back. This 1185 is now down 50 bucks, which is cool. All this work. I was waiting all day for like a really kick-ass dip. You know what I'm saying? I was like waiting all day for it. This is the first hurdle right here. This kind of like consolidating range that we're selling off. Let's watch some of the stocks though. See if we can get information. The stocks are like crashing out or selling out. Come on. Give me some more green here. I hope we're not flushing out today. All right, this first dip on the return. Let's see what we have here. 700 is that key pivot today that I'm going to be watching for the move here. And I think at best we test 700. I mean, at minimum we test 700 to see what happens. I think there's a lot of people, they've been waiting for dips like all day to act on this. So 700 would be roughly close to where 527 is. 526, right? 640 and 680. This is your magic 40-point range we talk about. There's your 40 points. Here's 700. Let's see what happens when we get there. Reclaiming 700 is rally for the day, so that would be nice. Looks like my account's back to green, kind of. But I expect this to flush like 2 times. So hopefully we get some burp up. I'd like to at least see this 700 hold and pass and break. Would be nice. Come on, let's go, highs. Let's go. Let's go. Come on, let's go, baby. Let me give you a status update. So I scooped this up with a couple of the accounts. This is the one on the screen. This is the one that's red right now. All the other ones are good. So, and then my MyFunded is great too. My MyFunded is almost up 2,000 bucks. Oh, go. Let's go. Let's go. That tweezer bottom. Oh, looked real good for long stops, bro. It was nice. That was super. You nailed it. Yeah, I love those tweezer bottoms. They're nice. All right, almost 1,800 of MyFunded. Let's go. Let's break 2K at 700. Let's go. 2K profit. My live account. At 2K yesterday, I'll get 2K today. Let's roll it. That's it. 2K profit. MyFunded. Let's roll it. Gonna break that 700 and go. I could trim profit here. Let's be smart, guys. Let me trim profit on that risk down to 1. Let her run or ride. Let me trim down and actually let me take profit on this my funded as well. I'm okay with the 2K for the day. So I trim my risk down to 1 contract here. This account's back to positive, which is good. Here's status update, you guys. This account is now green. All my shit's green now. I'm fucking crushing it. I'm glad I grabbed that dip. So the one that's on the screen is about $500 up. And now I just basically like, I'm going to hold a run around that to close out the day. Let me take profit on my funded in just a second. Next screen candle. Just this retrace move. 700 was my key level. Okay, let me close it out. All right, 1846 profit in my funded live account. I haven't traded my funded next. I'm still waiting to get that freaking account pushed to live. What's up with my funded? What's up with the? What do you say? Take profit. Oh, sorry. What's up with Take Profit Trader? They're not giving you credentials to trade when you buy a test. Really? I don't know. I haven't heard anything about what's going on today, but I've been kind of out of the loop today. Not really sure, man. I hope it's not like being crazy. Now, you guys that have gone through the illiquidity pivots class, it is no joke how good our yellow or red lines are. If you guys haven't seen this, we teach this in our boot camp, which by the way, we'll be doing boot camp in about an hour and a half. The red lines that we teach, they are such good pivots, man. On the return, oh, we overshot, we undershot, and we lost. Look at that volume that picked right back up, right? Market loves itself some red lines. Done. I'm happy with profit. I'm happy with making money. This account's now greener. This account was up 1,100 bucks and now it's down 500 bucks. But all of my other accounts are up even further. Remember, I started off the stream with $5,000 of profit. 453. So I'm up now. All of this work made another 1,000 here and then 2,000 in my funded. So that's actually not bad. That's another 3 grand since I started the stream. That 705 is my target. Let me close it flat and neutral. I'm kind of okay with this. I don't want to risk any more for the rest of the day. Here's the final tally. Actually, let me all this shit next to each other. How do I screenshot? All right, cool. Money's money. I ain't gonna complain. Let me give you the full tally. So all my accounts are green today, which is great. No blow-ups, no resets, nothing. These are all funded accounts, by the way. So this is real money total. These are Tradeify. And this is my funded live. So this is my live problem here. I did 2,000 yesterday, about 2,000 a day. Not a bad haul for the day. Boom, boom, boom. I know it's the giveaway song. Not a bad day. I just want to hear it again. I need some sound bites of like burr, 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 though. That'd be kind of cool. What's that? 61? Hold on, wait. Is that 7,900? 79.67 profits today, $8,000 a day. All funded. Let's go. Ooh. Not bad, not bad. AK day, not bad. 20 account giveaway, woo. Hey, I don't get as many as they give. I would love for them to give me 20 account giveaway every day. You better believe. Shoot, I wish I could ask these guys. And I get 50 account giveaways. That'd be nice. Need this for your lifting playlist. Oh, okay. So guys, y'all wanna steal the rocket scooter music from me? Let me show you where you go. Go to contest. We had a huge contest. I'm sorry. Song submission. Go to the trading chat. Go to song submission. You guys all have access to this. Every single song that ooh, I love Sick Egg. Every single song, we had this big rocket scooter songwriting contest with AI, and everybody submitted songs. They're all inside of here. I think song finalist is where, yeah, all the final ones are. And I don't know which one it is, but the ones at the bottom, it's like these right here. They're all going to be in there, all of our music. So you guys all have access to it. 20 account giveaway in silence. All giveaway accounts in spirit. So I once I doubled down at the bottom and I'm sorry, double down. Once I kept risk in this account light, I ended up adding at that next strike with my other accounts and brought the trade higher. As you guys see, I split my risk up. One account I didn't flex on. I mean, I didn't flee from. I didn't add to the risk either. I didn't like my entry. That whole trade actually lost me $600 on that account. However, when it did hit my target, I actually just made a mistake. I miscalculated that level. It should have been 640 and not 660. And so that's my bad. It happens. And then when it fell to the actual level, I decided, you know what, that is the level I wanted. And I hit this fresh with all the rest of my accounts. While this account lost money, this one and this one and this one and this one all made money, and so did this one. This one was at 0 all day. I never even touched it with my funded. So as you see, splitting out my risk, while you guys did, I always show you guys my first entry on the stream. So a lot of times you'll see like the worst of my trades, but I always announce, okay, I'm adding with one more. I'm adding with one more. I always say that. So I'm using my accounts to take this one I longed here, and then I added to it here and got a really bad cost basis. The other ones, I just basically all just ran in and jumped right there and longed, and then basically closed out right here at 700 or whatever it was when I took this photo. So splitting up your risk is how you, and I'm gonna tell you, on my funded, you know, I work for them and I love supporting them, but also my heart is, you know, while I work for the casino, my heart is I got to beat the casino. So when it's me and them, we talk about it. I don't sit there on the stream there and tell them this is how you beat the accounts. But how you beat trader funding programs is splitting your risk up. It really is true. That is the trick to beating the program. Never copy trade your accounts, split them up. One of my trades lost money. 5 of my accounts didn't, right? So as a trick, using your risk spread out, especially when markets are bullish and it's dipping, you can spread your risk out a little bit. And, you know, if you actually get to your strong pivot, you can actually make more. And again, I had one trade, one account taking risk here, the other account's taking risk here. I put all of my accounts in long there, as a matter of fact. So when you look at it like this, you'll just see that I'm not just adding in half of my accounts here and half of my accounts here. It was one account here and 5 accounts there. Once I actually hit my pivot I wanted, I took a little bit more risk on it. And I put more accounts to it. Again, all of this was 1 contract, maybe 2 contract. My funded was 2. All my tradefies were 1, with the exception of the one on the screen was 2. Yeah. So splitting up your risk is a super clean and easy way to minimize your cost. If you, again, not to glorify a martingale strategy, in a martingale strategy, if the market were to fall and you were just to add in each one of your accounts as the market fell, A, B, C, D, E, and the market just doesn't fall straight down and stay down, that would nuke all the accounts. But the account like plugs through and hits some of them and pivots somewhere. One of the account made a ton of money and the other 3 blew up. And if the amount you gain is less than what you lost, technically speaking, the prop world is a pretty good strategy, which is why a lot of them don't allow DCAing. But because you take minimum risk by buying an account, you know, $100 here and there, not a bad idea if one of the accounts made 2,000, right? So there's a lot of people that trade. There's a guy on YouTube that does this. He does this like martingale strategy, buys a ton of accounts and just throws money at it as they fall. And ultimately, when the market rallies up, half the accounts made a ton of money. The other half blew up at a $20 cost or whatever, Apex or whatever they're trading. And that's why a lot of these firms have a no DCA rule, because it's actually a very effective strategy only in the prop world. In a real account, you can't do that because you'll lose all your money. But you have fixed loss. You know, you're taking stabs with Apex at $20 an account. Martingale is what most of these traders would do. Like your big streamers out there would have a martingale strategy where they would long as the market's falling. And as they blow up, they'd buy more and blow up and buy more and blow up and buy more. And then ultimately at the end of the day, they've got 20 funded accounts, right? They take those 20 funded accounts and then they would YOLO long them as hard as they could, right out the door, get a big fat buffer on them, and flip the account for the remaining 10 days or whatever, and then apply for a payout and get denied because you can't flip your account with the Apex like that. And then you're cleared for your second payout. Then they have a big fat buffer for their second payout. And then they would just trade like normal with a big fat buffer in the account. May cost somebody, you know, 10, 20, 30 grand to do this, but then they got $200,000 of payouts in there for the second payout. These are things people do to make money in the prop firm. It's not just straight trading. A lot of the big influencers out there are using like hedging tricks and martingale tricks to really game the system for these big payouts. It's not cheating. It's not against the rules. It's just being clever with the rules that are there. But the prop firms are fighting back and like policing, you know, martingale strategies and things like that. Not let people do that much. But either case, I'm not employing a martingale strategy. I'm longing at two different pivots, and I'm just splitting my accounts up by longing one account at one and one account at another. And it's like a pseudo martingale, but not really, because I have two strong pivots I want to play from. I'm not just longing and hoping the market turns green. I'm longing strategically at a certain point. I've always went long on. Yeah. I don't, do I get accounts for free? Chris, 100% wrong. I have never, no, I pay for every one of my accounts. I actually trade just like you guys. They don't hand me free accounts to trade with at all. So no. And I get paid by my affiliate links. Well, okay, before you discount everything I do, I get paid by my affiliate links. I make 6 figures a month from affiliate sales. I make more than 6 figures a month from Rocket Scooter sales. I make sometimes 6, sometimes 7 figures a month from trading. I usually make 7 figures a month. Close to an average. Oh, the martingale streamer. Oh, I thought you meant me. Yeah, so the streamers, they make their money from yeah, they get the affiliate sales, they YOLO their accounts, and when they blow up, yeah, that's exactly, it's okay, bud. So when they do blow up, what actually happens is you blow up with them and their sales go up even bigger. It's a big, awesome scheme that they run, and I hate the idea that this happens. But imagine when they have their 20 PA Apex. There's a guy, I'm not going to name names, but he's one of those like GameStop AMC pump and dumbers. He's absolutely garbage trader, and now streaming on YouTube. And all he does is get 20 Apex accounts, copy trade them by trading all of them at the same time, and then use my code. Okay, so if the accounts go up, you can post, I made $60,000 today on Twitter. And when the accounts go down, you also made $60,000 from everyone else that blew up with you. It's crazy that people do this shit. Yeah, the other YouTuber, bro. Like this is what happens with people. It's crazy. But yeah. So like I have capital to be able to throw money at these accounts as well. I just don't do it in that kind of strategy. There are people out there that literally do this. Yeah, like, and they don't, and it's like every once in a while they get a payout and then they promote it so big. And I watch these streamers and it's like, copy trading is not something you should teach people how to do. That's not how you get a payout. I watched somebody post like they made a payout in January or something, haven't made a payout since, but constantly throwing 20 PA Apex accounts up and trading all 20 at once. There's a ton of streamers that do it. It's a trick. It's a hedging trick. Imagine this. Let me teach you this scenario. Here's how you guys go become a millionaire. You guys want to make millions of dollars every quarter. Here's the trick. Go get a big audience. Go buy Apex accounts. When they have a $20 sale, 90% off, go buy 1,000 of them. Literally 1,000. Go buy 1,000 Apex accounts when the sale's there. $20 a piece, you'll pay $20,000 for them, and you just got them in reserve, right? Go out there and copy trade and copy trade and copy trade in batches of 20. you know, for your 1,000 accounts, you'll blow up, or maybe do this with 100. Let's make it even better. Do this with 100 accounts, right? 100 accounts at $20 a piece. That's $200, $2,000. Okay, you spend $2,000 on these accounts, right? And then you play them in 20, and you play them in 20, and you play them in 20. Ultimately, one of them will pass, right? And then you got 20 that are PAs, and then you go out there and you paid, you know, $120 to turn them into, what is it? Is it 140 on Apex? I haven't done Apex in a while. All in, I think it's like $200 per account. Say you flip them to all PAs. You got 20 PA accounts here. And then all of a sudden you got this like, you know, copy trade YOLO them. You only spent, I don't know, 2,000 plus your 20 times 160, maybe another 3,000. Now 140 times 20. Okay, so it's $2,800. 40 times 20. $2,800. Am I doing this right? Yeah. $2,800 more to turn the ones that pass into accounts. So now you spend roughly $4,800. Perfect. You go YOLO those accounts. If those accounts, all you have to do is buy 2 contracts per account. Those accounts go through the roof. You make $3,000 per account. Great. You can say you made 3,000 times 20. And now you made $60,000 in profit. Not really profit yet, but it's profit on paper. Good job. Now you made $60,000 by just 2 contract YOLOing in NASDAQ. Good deal. Right out the door. And everyone that's copy trading you, because 90% of people that watch YouTube will copy trade any fucking idiot doing PA accounts because they're also bigger idiots. Then all of a sudden, if those accounts fail, you've got 1,000 people that failed with you that all go pay $4,800 each that you get 20% commission of. So imagine this. And I hate to say it because I'm in this mode, but being an affiliate for prop firms is a zero risk money printing machine. Zero risk. I don't put any money into the prop firm industry at all. It pays out more than I put in, even if I fucking fail every trading account I've got. That's how much it is out there. And I'm a medium big size streamer. There are people that are big that have, it's just a money printing machine. If you make it big, there's engagement points for you on Twitter. If you blow up, everyone blows up with you. And all you got to do is post a $200,000 payout every once in a while or $1 million payout every once in a while. And people will eat your lunch for 5 years thinking that you're great at trading. And they all know it. They all brag behind the scenes on how dumb everyone is and how it's a hedge strategy. It's crazy. Pretty crazy, right? I'm one person that doesn't do that. I actually teach you guys the right way to trade. Copy trading is only useful if you can hedge your losses with other people failing so that you can get commissions out of their failures. You guys understand what I'm saying, right? Copy trading and trading big is just to print big wins and then get big payouts if you lose, right? You lose trading, you made more in the commissions than you did that you put in those accounts. Now, I don't copy trade, so I don't run that scheme, but that's kind of what happens. Am I short biased or long biased? Today, I would still be long biased in the close. We haven't lost resilience. We haven't had anything sell off. Now, again, the idea is I was kind of like, I wouldn't be short biased, but there's no evidence the market's going to move either direction, to be honest. I would still stay long bias if I were in this trade to push it up to DD band or maybe higher. But I think that after the dip it did take, the selling has stopped and the volume is gone. So I don't think we're going to sell any further. This is why you watch Matt. He'll tell you the real stuff of the industry. So the whole point of that story is to teach you guys copy trading is the quickest way to lose. And it's the easiest way to get a home run, yes. But it's the quickest way to lose. And you're going to lose more than you win. Copy trading. I could teach you guys copy trading and my affiliates. Cash will go up tenfold. I could post 20 PA Apex, $100,000, $300,000 payouts once a year. People think I'm the world's greatest trader. And this stream will have 10,000 people watching it. However, I wouldn't be teaching you guys good trading if I was doing that. Space Spike, yeah, just send me a message about yesterday's giveaway. At the start of the month, I usually have to wait until my partners give me all the accounts to give out. So I'm still waiting for responses on yesterday's. Request for short interview at Funded Next. Currently, right now, they're interviewing people to go funded. It's just part of their KYC process. I have explained to them all day today that that's unusual for US traders. The US traders don't have to go through an interview style KYC, and they're listening and they're saying, okay, they're looking into maybe changing that. As of right now, don't consider that abnormal. Consider that part of their risk management process. These CFD firms typically have these very, because global, worldwide, right, where it's much harder to regulate than just a single country. You have to have very strict standards because there's so many people that can skirt the law and cheat, and you can't prosecute them. So these CFD firms have a lot more stricter rules to pay out than these US firms. It's just the nature of the game, to protect themselves. Here in the US, there's strict, it's easy to regulate and people can break the law or whatever, and you can easily ban them. But it's harder in other countries because it's harder to find people. There's no jurisdiction. You can't sue people, etc. easily. So they have stricter rules. But I'm telling them in the US, traders aren't used to this in futures, and that's making them uncomfortable, and they're going to lose business. And they're very seriously considering getting rid of it. So let me tell you guys, I've been fighting really hard about that KYC process with Funded Next. So, but don't be alarmed. It's normal. Some firms like Apex and others will also interview you if you're making too much money, just to make sure you're real and you have a real trading strategy and you're not a bot or something. Why don't I believe in copy trading? Because what you're doing, because it's okay. So when you see what copy trading is good, if you can predict the market, okay, it's hard to do. Like if I were to have 190% pivot and 190% pivot and 190% pivot nearby, splitting my risk up is the best way to ensure I made some money against what I put into the system. If I put in $500 per account, right? And then I blow up two of them, but one of them made money in excess of the 1,000 or the 1,500 I put in, then I've profited in the endeavor, right? Splitting your risk up allows you to profit better on the fact that your risk is minimized on the entry side of the trade. Now, if you can guess exactly where that pivot's going to be, right? Exactly where this pivot's going to be, it doesn't matter. And without a doubt, that's it. And you copy trade, you have no additional mechanism to lower your risk by using the accounts against each other. Each account is not measured on the total performance of all the accounts together. Each account is its own separate entity. And so splitting your risk up allows each account to discreetly hit its own profit target regardless of what the other ones are doing. And so one of the accounts may hit profit target, the other one may not. This account, you need to stop your trade anyways because you can't go past your profit target or risk losing it. So you're going to close your accounts out for that very reason, right? If one account needs to make 1,000 and one needs to make 2 and you copy traded them and one went up to the 1,000, you will cut out the trade of the one that's hit its target and let the other one continue to ride to make its target. So you exit your accounts because they're discrete individual entities. So because of that same philosophy, we don't think of it like why we should enter them at different times, is because you exit them at different times. Like this one, I hit my profit target here. Okay, time to close. But this one still has room to ride. Let's let this one ride. We let them ride at different intervals, right? So we shouldn't enter them at different intervals because that same protection works on the inside as well. This is a pivot and that's a pivot. Well, let me long at this one and take risk here. Ooh, it fell lower. Let me long at this one and take less risk here. And if the one that has more fat to play with, like this one has 50,000 of fat in the account, this one has 20,000 of fat in the account, then I can even go further by taking my account that has more ability to take drawdown to be the one that hits sooner than the account that has less ability to take drawdown here. So like now what I did was the account that took the most risk here was the account that has the most room to play. It's got 50,000 in profit. I got plenty of space to hold $2,000 of drawdown like that one did. Whereas the other ones that don't have that much room were the ones I hit at the bottom where the risk was lower. See what I'm saying? Doesn't mean copy trading is bad, but when you do copy trade, you better make sure that that's the pivot. Yeah, A++, but then you're putting all your trades into one basket, and you better get it right. And the idea is that if they all start losing, then you've lost all your trades and all your accounts, and you have no wiggle room to get back in. Wouldn't you like to have maybe 5 of your accounts left over just in case your first A+ setup fails and then hits another target of interest? You're not stuck not trading the whole day because all your accounts went under. You might have a few more to maybe take a trade there. And those may have passed their eval stage today while those blew up, right? So you're just distributing your risk to different areas so that you ultimately spend less money every month. That's kind of the rule. Yeah. So how do I trade my main live account? It's very similar process. I just split my risk up in different places. I add different size contracts. So my main account, I have a total loss for the day or whatever I'm looking for, and I have maybe 3 pivots nearby. I might long at one pivot, add 2 contracts at the other, add 4 contracts at the other. Each time it lowers, I take bigger risk as it lowers to different strong pivots and lighter risk on the one that has further to travel. That's a good strategy with the real account. Personally, it would be nice if you trade sensitive accounts on stream instead of big buffer ones. So Ghost, let me explain something to you. In the prop world, there's really no such thing as one account. Although they are judged individually based on each individual performance, my strategy is all the accounts together. Part of the strategy is splitting up the risk that way and putting my bigger accounts with more buffer as the first entry, etc. You know what I'm saying? So the strategy does actually involve trading the more sensitive accounts first and the less sensitive accounts last. But the problem I run if I trade like the other accounts on stream, like the last one I enter, like I enter my first trades on stream and then hit my less sensitive accounts later, there's no guarantee those will actually make a trade. What if all of my accounts fall here and this is my first pivot on my account with the bigger fat, and I get it on that trade and then it moves up, and then I have to drag that one on the screen and be like, well, that was the one I was trading off screen. Then you guys would say that was shady. That's actually the conversation I had with myself. If somebody drags a trade on screen, trust me, plenty of influencers and streamers do this. You don't see them enter the trade on screen. They drag it on when it's winning. Oh, coincidentally, drag it on when it's winning, right? So, but that being said, my first trade must be the one on stream. Or else you guys will call shenanigans if I manage to pull a winning trade from off screen on screen because my second and third accounts just didn't enter the trade because I didn't follow the second pivot. Does that make sense, Ghost My Light? Does that make sense, everybody? I had this debate with myself. Should I just show, like, should I just drag onto the screen the last trade I make? That way it's the more conservative one. And then people would be like, oh, what the fuck? Why is he dragging accounts on the screen when they're winning? A lot of streamers do that. And boy, it's shady, right? So I'm kind of like, okay, I need to commit the first entry I do, which is the one that takes the biggest heat on the stream. And I know it sucks for people that are like, I want to watch this guy on YouTube and copy his trades. You shouldn't be copying trades, right? And that's kind of like the conundrum I am, because there's no guarantee I will get entries on that second or third account, right? But now I could show all 5 accounts on the stream. However, I've got no more real estate to play with. That's the part that does suck. I don't really have much room to put more DOMs on the screen. I thought about maybe switching to NinjaTrader so I could put all my accounts in one place, but then I hate NinjaTrader, so. But there are a couple more platforms that are coming out that have the ability. There's a couple I know of, the people I know built a platform that eventually, when it's out, will have the ability for you to put all your prop firms in one platform. That might make it easier. So I know a couple of my friends, or each of them are building different platforms that might have this ability in it. Like an actual trading platform itself that allows you to tie all your prop firms in one place and just easily switch between them. Yeah, Tracer at its launch won't have that feature, But I went and had lunch with Matt like a couple of months back, and his ideas are big. Matt hopefully will take trades in that direction as they get bigger. The ability to put all your stuff in one, like their launch is, I don't think it's going to have multi-account capabilities, but I haven't been following. But yeah, he's ready to take that challenge on, so it'd be kind of nice. What's wrong with Ninja? Ninja's a 20-year-old program. I mean, it's a resource hog. It requires very fast CPUs, and it just locks your computer up. You don't have a good computer. Other than that, it's okay. It's just very old, and it's not user-friendly to a new trader. Quant Tower, also not easy. Yeah, like a lot of the futures platforms aren't that user-friendly for new traders. Ninja's not bad, but it's just a learning curve for sure. Chris has 4 platforms connected. Yeah. Nice. Yeah, the best thing about the Ninja, if you just use it for a DOM, it's totally fine for that purpose. Just entering and exiting trades. They have in their terms and conditions that you're prohibited from copy trading cross-company prop firms, but everyone does it. Is Tradeovate the best for copy trading? No. Tradeovate's good at copy trading. You can. It's actually not that bad. If you want to split up your accounts into multiple groups and different DOMs, it becomes a little harder to manage. But Tradeovate's not bad. If you're trying to copy trade all your accounts at once, the Tradeovate one is pretty good. Just make one group and put them all together. Khan doesn't use it for enter and exit trades. That's all I would use Ninja for. I wouldn't use any of the other features. The charting and all the other stuff is decent, but it's just really, it's like a huge resource hog. And even back then it was. These days it might be a little better with computers being faster, but I mean, in 2015, it was great to be able to write your own stuff. And .NET, you get like C#, I guess, I think is the language. You have full .NET suite in there. You can kind of like play with anything. You have unlimited boundaries to make indicators and stuff. But you had to have your computer would be like always having issues with it. There were always bugs with it. The best copy trading, since I don't do it, I don't know, but somebody here might know the answer for copy trading. Motive Way for a long time, have no complaints. Motive's pretty good. How should one tackle intraday drawdown account? So you need to take smaller trades, like you're not taking... Intraday drawdown accounts work best when volatility is low. And we teach something called triple B. When VIX is below a certain level, your volatility is likely to be low for the day. Then you're not going to have a lot of drawdown. You want days like today, we're going to have a lot of drawdown. And you don't want to hold runners either, because the runners typically don't go up forever, and they turn around. You really want to take small base hits in a trailing drawdown account. You want to go for 1-to-1 trades, or maybe like 1.2, 1.3 to 1 trades. Like you want to inch your way forward. Trailing drawdown is so tight and so punishing on drawdown. You don't want to take a lot of drawdown, which means you can't take a lot of a winner either. A+ setups only, non-volatile environments. Hit your pivot, get your 10 or 15 points in the S&P, close out before it turns around. Don't hold for 20, don't hold for 30, don't hold runners. Get in, get out. Intraday drawdown is very hard, and it requires you to just take a million base hits and win. Very tough. As Chris is saying, micro scalping. You're in and you're out, you're in and you're out. Get your 10 points, get your 30 points NASDAQ, 40 points NASDAQ, and close. Don't hold all day in a consolidating range betting for a breakout. Get in, get out. You're gonna have very quick trades. Yeah. Does my fund and futures have trailing drawdown? The expert account and the starter plus account. I'm sorry, this expert and the starter. Let me start over. They all end of day drawdown with my fund and futures. It's all end of the day, so it's not intraday drawdown. And the starter and the expert, the starter, these backwards. The expert and the starter plus have no daily loss limit to go with it. So their end of the day drawdown, it's much better. The drawdown moves just once a day instead of in real time. Even on the funded accounts, yeah, they're end of the day. All EOD on my funded. Oh, you did? Cool, man. Yeah, good luck with it. 50% off is nice, man. That makes right on the cost ratio like 20, man. That's really solid. Oh, that was your question on Twitter. Okay. Hopefully I answered it for you, bud. All right, guys. I got to take an hour break. I'm going to get out of here, but I'll see you guys at 4 o'clock for the boot camp. I need to go let the dog out. He's been cooped up all day. I usually will stream up until about an hour before close unless the market's exciting. I'm not taking any more trades right now, so let's get out of here. I love y'all. Make sure you sub to the channel. We'll be back tomorrow bright and early, 8:30 in the morning, and again on My Funded TV at noon 30. Love you guys. Gotta let the dogs out. When I short this red line, I don't short bull markets in the close. I never try to fade a good bull run.